Ladies and gentlemen, dear colleagues and friends on both sides of the Atlantic, on behalf of the Konrad-Adenauer-Stiftung, I welcome you to today's event, the launch of the report, The Emerging Global Data Economy Implications and Options for the Transatlantic Relationship. My name is Paul Linnartz. I'm head of the office of the Konrad-Adenauer-Stiftung for the US, based in Washington, D.C. The Konrad-Adenauer-Stiftung, or in English, the Konrad-Adenauer Foundation, a German institution with civic education centers all around Germany and more than 100 offices worldwide. Transatlantic relations, our close cooperation and partnership with the US and Canada on the one side and Germany and Europe on the other side of the Atlantic, is one of our most important topics since many decades already. One of the prominent themes in our portfolio is centered around digital governance, innovation, and security. This is why today I'm especially pleased to be part of this event and very happy to be thanking Olaf Groth and Tobias Straube from Cambrian LLC for authoring this exceptionally timely and important report. I'm equally honored to welcome Sanjay Srivastava, who is Chief Digital Officer of Genpact, a global professional services firm working on business and digital transformation. He will help us unpack the wealth of information this report provides. The report illuminates the data sphere and the expanding digital world, highlighting the opportunities that digital solutions can bring, while also pointing out recommendations for the public and private sectors. Cambrian analyzed both the challenges and opportunities in a growing data sphere, the evolution of data sharing, and the implications for the data economy. As always, with this event today and with the report in particular, we hope to contribute to the strengthening of the transatlantic partnership and increased mutual understanding in key policy fields. Let me say a little more about our today's panelists. Olaf Groth is global strategist, entrepreneurial think tank founder, trusted advisor, and serial author of For Cognitive and Deep Tech Disruption, Discontinuities and Strategies in the Global Economy. Olaf has 25 years of experience as executive and advisor building strategies, capabilities, programs, and ventures across 35 countries with multinationals, including Boeing, Chevron, GE, and Volkswagen, as well as with consultancies, startup foundations, governments, and academia. He is the founding CEO of the advisory think tank Cambrian Futures. Olaf serves as professional faculty for strategy, technology, innovation, and futures at UC Berkeley's Haas School of Business and is professor of practice for global strategy, innovation, economics, and futures at Hult International Business School, teaching across campuses in the US, Europe, Middle East, and China. Tobias Straube is an advisor and entrepreneur in the fields of deep tech and international economic development with plus 10 years working experience in Europe, Africa, Latin America, Asia, and the US. Tobias is VP Analysis at Cambrian, board member at Digital Waves, assistant instructor at UC Berkeley in executive education, and co-founder of the Symbio network. At Cambrian, a Berkeley-based lab for product and strategy design for the human-machine economy, Tobias has led and co-designed international strategy and research projects, including an analysis of 13 national AI strategies for the Konrad-Adenauer Foundation headquarters in Berlin. Sanjay Srivastava is Chief Digital Officer of Genpact. In this role, Sanjay leads Genpact's growing digital and technology businesses. He oversees the company's offerings in artificial intelligence, analytics, automation, and digital technology services. He also oversees the Genpact Cora platform, an artificial intelligence-enabled platform that builds upon customer experience at the core and delivers industry-leading governance, integration, and orchestration capabilities across digital transformations. Before joining Genpact, Sanjay worked as a technology entrepreneur, creating and building 4 startups from the founding stage to sustainable product businesses. International Data Group, IDG, has named Sanjay as one of the, quote, 10 digital transformation influencers to follow today. Dear Olaf, dear Tobias, dear Sanjay, thank you so much for joining us today. Now, I hope everybody is going to enjoy Olaf's and Tobias' presentation and remarks, and the following Q&A discussion with the authors and Sanjay. We also invite audience questions that can be submitted through the Q&A function at any time. Olaf, the floor is yours.
Thank you very much, Paul, for the eloquent introduction. I feel honored and humbled. I would like to yes, thank you very much, Tobias, for bringing up the first slide. Would now like to take the occasion to, or the opportunity, I should say, to thank you, Paul, to thank Dirk, our steady collaborator on this, to thank Jan, of course, and Konrad-Adenauer Foundation globally, but specifically also the Washington, D.C. office for another productive collaboration as we're bringing to our audiences globally another report that we hope will turn out to be seminal, much like the other reports we're about to flag in just a second. So thank you for the collaboration. Why the global data economy? Because that is the frontier of the global economy, period, as data becomes a critical production factor. And that has significant implications across other production factors and other parts of society. We're going to dive in here shortly, but now let me just reintroduce the two of us here briefly. The chief talking heads, if you go to the next slide, Tobias, are of course Tobias and myself, and then more importantly, my good friend Sanjay, a steady collaborator of mine at Genpact. We have had various occasions, if you go to the next slide, please, Tobias, to collaborate with each other. And Sanjay is a super sharp thinker in the digital sphere, especially as it comes to data and artificial intelligence, of course. Thank you, Sanjay, for honoring us with your presence here today. You'll be hearing from Sanjay right after Tobias and I have introduced our report. Let's go to the report slide, Tobias. You will see that the report that we're introducing today, if you go to the next slide, please, Tobias, is the really the fifth in a series of reports that we have authored for and with Konrad-Adenauer Foundation. Yeah, it's not quite coming up yet. There we go. Okay, let's just relaunch it. No worries there at all. We have had a steady collaboration with our friends at Konrad-Adenauer for, I want to say, the last sort of 5 or 6 years, examining new cognitive and digital technology trends, such as artificial intelligence. Exactly, there we are. Evaluating 14 national AI strategies about 3 years ago, and then putting the evolving, emerging German strategy in the context of that, and finally culminating in a global trends analysis on the latest technology and economic developments with a focus on Europe. This latest report here examines less the engine room, as it were, the AI models and the people and institutions behind designing them, and really more the fuel that goes into these engines, global data. And that's really where most of the action that has economic implications, business model implications, and policy implications will be happening. What we're going to be doing with this introduction is we're going to go macro level, meso level on industry, and then micro level on people, and hopefully you'll hear all of this shining through. How is the report structured and how is our talk structured? Into essentially 3 different parts, right? So you see here a diagram of the data value chain. And even though it looks pretty blockwise and structured, this is really supposed to be understood as a more circular phenomenon. It starts with growth of the data sphere, and that's really data creation in what we have been hearing about. That's the Internet of Things, emerging now slowly but steadily with many, many edge devices, end user devices, on which more and more computation and data storage will be happening. Next then is data sharing, and that's the next 3 layers, really: data storage, data curation and pooling, as well as data access. A lot of value creation here. You'll see some numbers in just a second. And then there is data quality and quantity, because that does remain a very interesting and very critical topic. However, with a lot of disruptive change within that will be guiding you through. Again, it's noteworthy to say, and we've tried to indicate this in this graphic, that of course, it's not just on the bottom level of this where data is generated in the IOE, but also at the top level where data innovation is happening with new business models, with new customer solutions. That's really the application layer in this stack. Okay, let's go to the next slide. Why is all of this so pertinent? It's pertinent because we are seeing a global avalanche of data having been generated even before the COVID crisis. We had seen between 2016 and 2020 a 10x rise in data traffic all over the world. From 2018 to 19 alone, we have seen 35% more data created per user, and we've seen an increase in the user base by 7% off of an already very large base. So these are very, very large numbers that are only bound to increase even more. COVID-19, needless to say, has accelerated that growth. And in the middle of the pandemic, IDC, one of the most blue chip research firms behind this kind of domain, has revised its numbers upwards a number of times. We're standing now at something like 180 zettabytes of data being generated every year. 1 zettabyte, mind you, is a 1 with 21 zeros, massive amounts of data. Looking then at how this data is generated, next slide, please, Tobias. We are seeing some differences around the world. Maybe to nobody's surprise anymore, Asia is very clearly on the ascent when it comes to generating data, led by first and foremost China, of course. And relative to those numbers, Europe and the United States are declining in relative share of data in the global data economy. That doesn't mean that they are stagnating, far from it, dynamic economies in their own rights, but proportionate to Asia and China, less data generated here. We should, however, note that this is for data at rest, is what we say. That means, data being generated and put somewhere, and that's where it stays. And in those terms, Asia is leading. When we look at data inflow, so data inflow between devices, between different storage mediums, data being processed and shared, then we are clearly seeing the United States still very much leading, by and large, based on the fact that its global internet platforms are leading globally with the greatest numbers of unique users all over the world, and those users are transacting with each other. So the data flows between North and South America, North America and Asia, North America and Europe still very much dominate the global data flow picture. The weakness here in this picture, of course, is data flows between, say, Africa and Europe, Africa and the United States, mainly because of missing broadband infrastructure that is so needed for enterprise data activity, but also due to other economic and social factors that policymakers have to address. However, I'm mentioning this because Africa is, as our good friend Kai-Fu Lee said, the next billion users of AI and data science and data insights. And so, and that fact has been substantiated by a number of people, GSMA and various other research entities have substantiated this. We're going to be seeing an additional 14% of the world's population using the internet over the next 5 to 10 years, and they will mostly come from the global south, chiefly from Africa. So watch this space if policymakers and corporations can build the right infrastructure and business models to address the bottom of the pyramid. Okay, next slide, please. All right, so this is where I'm going to hand over to Tobias. Suffice it to say that what we're seeing here is this avalanche, and with that comes a lot of political, economic, and social power but that can only be instantiated and acted on if we have data sharing. Over to you, Tobias.
Thank you so much, Olaf. So what we have learned is that the bottom layer of the data sphere, of the data value chain, is growing as more and more data is getting generated. But the pure existence of data alone is not enough to create value. Equally important is access to data. And this is what we mean by data sharing generally. If we talk about data sharing, we need to make a distinction between data being shared within organizations and data being shared between organizations. And here on the left-hand side, you kind of can understand that, or you can see that data sharing within organizations is continuously growing and is becoming a core capability because 20% data lakes and data warehouses are growing by 20 and 10% respectively. Data lakes and data warehouses are the key architectures for data sharing within organizations. Now, the picture doesn't look as great when we look at data sharing between organizations. Of the interfaces being built, so-called APIs that allow data sharing between two entities, of all of them being built, only 6% are solely for external use. And when we look at public-private partnerships for data sharing, called data collaboratives, then the NYU GovLab was only able to identify 230 in the world. I think here we can start to see that leveraging the data sphere and the data value chain really heavily depends on our ability to create safe spaces in which data can be shared between organizations. Now, the European Union is trying to tackle that. In its forthcoming EU Data Act, they are foreseeing so-called data spaces that should allow exactly that. However, it is so far rather unclear of how those data spaces will be designed and whether or not they will be working. The news portal Politico recently called the lack of mechanisms and systems for data sharing between organizations the Achilles heel of Europe's AI and data strategies. So we really have to observe the space very closely, and we'll have some recommendations on that on the back end of the presentation as well. Now, data sharing nevertheless happens. However, today it mainly happens through platforms. Platforms that share data in particular between users like me and you, and companies, in the case of social media, marketing companies. And those platforms have established themselves through two growth strategies, taking an increasingly bigger share and control over the data value chain. This is first of all through vertical integration. This means that platform companies have turned cost centers into profit centers. So the data centers they required to maintain their own operations, they started to offer to third parties as a service, hence the cloud. However, there are going to be some challenges down the road, and we'll have to observe if platforms will be able to tackle them. First of all, only 1/4 of all data created is currently stored in clouds. And there's a growth of the data sphere is outpacing storage capabilities. By 2025, roughly only 10% of all data generated will be stored at all. And this data will be stored across multiple devices, edge devices, remote locations, and private data centers. So for platforms to maintain their control over the data value chain requires a new framework to embrace that rather fragmented and increasingly fragmented data storage landscape. Another growth strategy of the platform economy is horizontal integration. So taking control of more and more data from across industries. Here's an example of Alibaba, the kind of industries they have tapped into already. And that is necessary. If you take Google, Amazon, Facebook, and Apple alone, they would need to add 1 trillion to their revenue if they would want to continue their growth projections. And here it has to be seen if and how this will actually play out. Because while the dynamics are there and the possibilities are there, we see regulators and policymakers cracking down on platforms as, for example, with the Digital Service Act and the Digital Market Act coming out of the European Union. However, there's a third paradigm emerging, a decentralized paradigm about how data is being shared. A model and a paradigm that takes away the need of central entities such as platforms or agreements such as data collaboratives. And this is called Web3. Web3 essentially refers to the third generation of the internet. Web 1 was around the 90s and 2000s when we were able to read news on the internet and send emails, but not much more. All of that changed with the emergence of Web 2 and platforms. Social media, for example, allowed us to interact and collaborate and create content in a different way. However, the business model was that you have to give up the control of your data and hence the ability or the possibility to even commercialize it. That, in the end of the day, has also eroded a lot of trust in the digital economy. It's at record low. So Web3 promises to change that. It promises to allow data sharing between individual entities without going through central authority or central entity, such as a platform business. It also allows you to keep control over your data and monetize it yourself. One can, for example, imagine a Web3 social media platform would allow that you take your followers and your pictures from one platform to another, because you are owning the data that you're putting there. And the business model of the Web3 platforms are essentially different or fundamentally different to what we know from Web 2. Now, this Web3 builds on 4 pillars: cryptocurrencies, which allow economic transactions; decentralized finance, which has built the infrastructure for trading data or digital goods without an intermediary. And exactly those learnings and this infrastructure is now expanding to other use case areas outside finance. Non-fungible tokens allow the securing of digital ownership of data. And decentralized autonomous organizations are the organizational type that we see appearing that is governing those decentralized applications. Those DAOs, they do not need a board anymore or a C-suite calling the shots, but it's rather the members of the DAO that make decisions jointly and that get implemented then immediately. We see those DAOs already governing applications and decentralized services. However, they are also now entering into other spaces, something that is incredibly interesting to observe as we're going forward. They are, for example, allocating funding in ventures, as well as managing complex organisms such as a city. You will find one, for example, the city DAO that just bought land in Wyoming, United States, and manages the land solely through this organizational type. Back to you, Olaf.
Thank you very much, Tobias. I want to highlight the point that Tobias just made one more time, which is that we are seeing this new paradigm of a more hybrid mode of organization between centralized and decentralized data trading and data curation emerging, and that will be a fundamental change in how we generate value in society. If you're asking me as a strategist, what matters most in this, then I would have to say that value created somewhere on a handset is nothing if it isn't perceived by somebody who is willing to pay for it. And only then can you capture value, whether that is societal value for human growth, such as in healthcare and in education, or whether that is economic value in business. In order for that to happen, we have to create a new data trading paradigm. And we are, in effect, seeing regulators as well as corporations take a role in this. We are seeing the Japanese government establishing now personal data trust bank principles. So these are institutions that take your data, take enterprise data, take consumer data, try to understand what matters most to you, what data is private, has to be privacy assured or privacy guarded, and which data could be sold to your commercial or health benefit. This is being supported by the Federation of Japanese IT Associations that are managing a certification system for these data banks, calling them information banks. This is remarkable because Japan, while it wasn't leading on the front of artificial intelligence, is very much leading on the front of not just national but global data trading. The World Economic Forum, likewise, out of its Japan Center for the Fourth Industrial Revolution, has launched a Data Common Purpose Initiative, the DCPI, that also aims at creating global marketplaces with governance assurance. And then lastly, we are seeing the emergence of a digital economy partnership agreement, the DEPA, out of Asia, with the members being Singapore, New Zealand, Chile, South Korea. Japan is also considering joining. China has said it is considering joining and making an application. And so we are seeing a much more globally multilateral engagement on a policy level. And I'm the first one to tell you that we cannot do this without corporations. Corporations need to be at the table for this. We have seen companies such as Microsoft, for instance, take leadership roles in this with their own concept, like Jaron Lanier's MIDS concept. How do you trust assure data? How do you privacy assure data so it becomes tradable in a respectful, human dignity assuring way? Next slide, please. So what are we looking at here? We're looking at tremendous value to be created. IBM has estimated the value of the value lost from bad, corrupted data being somewhere on the order of $3 to $3.1 trillion. That's just the value that is lost with existing data that is not yet ready for use, or that if used would yield bad or corrupted insights. But then there is a whole nother horizon here, and that is the second $3 trillion number that you see here, and that is the potential of market outcomes if we actually made data tradable, if data could actually find the people in the market that are most able to derive value from it and pay for that data into whatever purses, whether these are private consumer or government purses or nonprofit purses. That optimum allocation of data value is not currently happening today because most of it is hidden behind large platform doors. So data, big data matters, but we're also seeing some other trends here in terms of small data and wide data. And this again comes full circle to a democratization of data trading through blockchain and DAOs, such that these DAOs can now much more effectively harness data on edge devices. This is a very forward-leaning trend. Stay tuned for more information on that in the future. Tobias, back to you.
Thank you. So we've talked about the bottom layer of the data value chain and then the middle layers, right? Data storage and data access with regards to data sharing. Now, the top layer is where value is actually really generated. This is where data is turned into digital innovations that make a difference. And today, if you were to develop an application that is AI powered, you would need big data, hence a big data set in order to train your artificial intelligence. Now, also this is changing, and there are three trends in particular. First, there's automated data cleaning. There's a rule of thumb: the cleaner the data, the less data you need. Now, if data cleaning becomes automated, then it's also easier to clean it. Second of all, there are new trends of machine learning approaches that require less data right from the start. And last but not least, you have now the ability to create synthetic data. So if you work in edge cases where you do not have sufficient historical data, let's say pandemics, for example, or language applications for communities in Africa where you don't have sufficient voice data, then you can synthetically generate data in order to still train your AI. So there is a trend from big data to small data, and Gartner Analytics, an analytics firm, projects that 70% of companies by 2025 will invest into small data. So this is coming. A second barrier, however, is also in building digital innovation driven by artificial intelligence, is talent. Talent is one of the key cost drivers because of the scarcity of data scientists and machine learning engineers. However, also that layer is changing because there's an emergence of so-called no-code, low-code applications and automated machine learning. That means that with this help, you can in part write or develop applications that are AI empowered without writing a line of code, making it accessible to an increasing amount of companies. But this also means some strategic implications for companies themselves, because the moment technology is not the USP anymore, you need to look for alternatives. And this will be the question to explore as we are moving further. Back to you.
Thank you very much, Tobias. It's very clear that, and again, this is another point to highlight, that data cleaning, data curation is a tremendous source of value. 60 to 7% of the time of a data scientist is spent cleaning data. 96% of all corporations are saying they're having issues with data cleaning or data corruption. So there is a source of value here. It may not be seeming glamorous, but it is very instrumental for the economy. Now let us go to the recommendations. This is really sort of where the rubber hits the road before we go to our dialogue with Sanjay and our audience. So first of all, we feel that we've broken this down into two parts. The first one is on a macro level, how do we assure that data can flow and that data is privacy and dignity assured, right? Those are the first couple of recommendations. Then we're going more to the meso and micro level, which is sort of the industry and the use cases, before we turn our gaze to the future over the next 10 years. So recommendation number one, we're saying we need to renegotiate the privacy shield. Now, very luckily, since we actually finished the report, the US and Europe have announced that they are renegotiating the privacy shield. That is a fantastic news because it opens up the path to another recommendation of ours, which is a data-free trade zone between Europe and North America. But we want to go beyond this, and we want to see this privacy shield as well as the free trade area be expanded eventually also to the countries of the Data Economy Protection Act, which is the DEPA. So that will be our recommendation here to top up and to spin forward the privacy shield strategically. Number two, enforce data protection by creating a supranational data protection agency. As we make data protection more of a multilateral goal, we need to have an agency that can oversee this. This cannot be done within the confines of the OECD or the United Nations. We need a separate specialized institution that understands data-driven entrepreneurship and solution development, very heavily technical, but we have lots of good talent to help us do this. Recommendation number three then is create a transatlantic free data community. We've dubbed it an FDAT with a multilateral data agency. We have to start trading data after we have privacy assured it. This is important because data, as Tobias said, is becoming an important, if not the most important production resource. As we have assured privacy, we now have created trust. Trust is the most important currency for trading. You can always make more money, but trust once lost is hard to regain. So privacy, trust, trading is really the sequence that we have to go into. Finally, then we have to flip the power of data trading from the large platforms, centralized paradigms, to the individuals. We have to make sure that we protect their data footprint, whether the solution is called a MIDS or an information bank or a bouncer bot concept, whatever it may be. We have to give agency to the individual chief information officer or chief information security officer, or the business unit head in a corporation, but also to the individual that has created the data footprint. So we have to think about that nestling between the individual, the corporation, and the government, creating governance frameworks for all of this. Okay, recommendation number 5, promote data and set up data market reference designs. So this is where the government is needed, right? We need to have a quasi-stock exchange for data. We need to have an institutional framework that is trustworthy, that is transparent. One of the key strengths of the US market, with all of its ups and downs, is that it is amazingly fluid and transparent. That needs to be replicated in a transatlantic free data market or a global free trade market. Let's go to the next slide, Tobias. Thank you. Okay, now we are talking more on a meso level, which means industry models and business models. As we explore Web 3.0, or as some call it, eventually even the metaverse, we need to create frameworks that allow for clean experimentation. That means entrepreneurs have to have the leeway to, in a controlled and monitored fashion, experiment with new data business models, involve stakeholders in a co-creative manner, in a manner that allows them to audit and monitor what the second and third order effects of data business models are. We cannot do without those safe spaces for entrepreneurial experimentation, but we can also not do without stakeholder involvement. Again, here, decentralized autonomous organizations are a great mechanism that is now emerging that allows us to involve more stakeholders. We, of course, have to also get into token economics, because a lot of data trading will be done along or logged with the help of blockchains and paid with tokens. And so we need to understand tokenomics. I was very glad to see President Biden's executive order on this front. Of course, we need to go beyond central bank digital currencies towards stable coins and other types of tokens to enable that trading. Recommendation number 7, we need to lay the foundation for more equitable growth, right? We already mentioned multiple times human agency, human privacy. You can also say corporate confidentiality, right? Trade secrets, all of those are very much playing into this domain. We need to add a T to ESG, a T for technology and data. So we need to make sure that corporate reporting frameworks, government monitoring and enforcement frameworks have that T in there when it comes to social justice and equitable growth. Recommendation number 8 then is building cognitive design and insights teams. We're seeing a shift away from just hiring raw data science and AI talent toward needing more use case design and insight generation teams. That's really where most of the value is. Of course, it still matters whether you can design your own algorithms, the choice of designing your own algorithms versus taking somebody else's algorithms. And it still matters whether you have unique data or not, but increasingly that will become more commoditized. And then what really matters is how you reap the value, whether it is for your business customers or your societal stakeholders. And that happens on the application layer with insights generation and use case design. And then finally, as we do all of that, we must not take our gaze off the future horizon. Digitalization is a 2010 term, and it's still needed. It's still required because too many organizations are still too analog, but we must not rest on our laurels there. We have to look at cognification, which is the automation of decision processes with the help of data. That will be increasingly happening, not just out there in the internet and on our trading platforms and in our organizations, but also in our heads as we add things like quantum computing and brain-computer interfaces to this vast global network of data generating nodes. And that will present a whole nother dimension of challenges for business executives and policymakers alike that we cannot ignore. So that is it from our end. Thank you very much for your attention to this. We're going to go to the interactive part. I'm handing back to Paul.
Thank you so much, Olaf. Thank you so much, Tobias. That was fascinating already, but time is flying, so high time to bring in Sanjay. For this, I'd like to turn to my colleague Jan Bösche for the first questions. Jan, please.
Yes, hello everyone, and thank you very much for this very interesting presentation we saw. Before we go into questions, a very important thing I have to do is I have to post the link to the study. So everyone should see the link now in his chat function, and you can download the study there if you want to. And now, of course, the first question we have for our guest, Sanjay. Sanjay, what do you see as the broad strategic implications of this evolution of the global data sphere and data sharing for different industries in terms of business models and, of course, of growth potential?
Jan, thank you for having me here, and congratulations, I think, Olaf, Tobias, on a fantastic piece of work there. Listen, I suspect my role here is to bring a little bit of the perspective from the world of enterprises, from businesses, and I spend all my time actually helping companies digitally transform their core businesses. And I'll tell you, I'll start with this because I think it's so immense, the work you've done. Data is becoming now the largest driver of transformation value for companies across the world. There's a big fallacy, or there's often a little bit of confusion. People think about technology and data as one and the same. Actually, they're two completely different asset classes, and we must think about technology as an asset class and data as another asset class. I'll bring that to life with a simple example I know we all use. I started my driving career when I started driving with map books that I would open on my lap as I would drive. And then we all went from there to Garmin and the GPS, and then eventually the mapping software today. And you look at the experience that we've sort of gone through that phase, and you think about where I sit today. I can predict what time I need to start tomorrow to go to a certain location and arrive there by 4:30. Or I can, as I'm on the road driving to that location, immediately change my routing based on traffic conditions that are happening through. And then you take a step back and think about the technology part of it, which has been around for years, right? The GPS capability, the visualization capability. And you think about the data, which is some of the things we've seen in the recent past come through. And you think about how that's changed the experience. It becomes very clear, just in a practical, real life example, why data drives so much transformative value in the way we actually intercorrelate with the world. Well, the same is exactly true for large enterprises and small enterprises across the globe. We see e-commerce, we see retail completely changing. Today, I go on my favorite website and I try and order some things, but before I can, it tells me, here's a few things, Sanjay, you must look at. And those are recommendation engines that are looking at the data of things that I've bought, data of things that other people like me have bought, and they're trying to provide some helpful recommendations. And it turns out today, maybe 3 of those 10 things, maybe 4 of those 10 recommendations I end up buying. But as AI gets better and as data makes that happen, what will end up happening is 9 of those 10 things will be exactly the things I want to buy that week. And as that happens, the business model will change. No longer do I need to go to the website. That company will actually take a box, put all of those 10 things in, ship it to my front door. Monday morning, I open the door, I have a box. I open it up, there are 10 things in there. 9 of them I actually wanted to buy anyway that week. The one that's remaining, I just put it in the box, put it out, and it gets picked up. You can see how transformative that whole experience is and how it changes the economics of how retail and distribution gets done. Already, we're seeing companies we work with that sell products or used to sell products are actually selling as a service consumption. Aircraft engines are no longer bought. What is being bought by is number of miles flown, or trucks are no longer being sold. What is sold is number of miles driven. And that's happening because the data allows us to do predictive insights and predictive maintenance and be able to figure out how to deliver the most optimum results on that piece of equipment in a much better way. And so we think data is completely transforming the world around us. We think it's the largest driver of transformative value. And as a result, it's no surprise that as you look at large corporations and small businesses across the world, this has become a top investment focus for most CIOs, CDOs, and CEOs of corporations. And so anyway, Jan, long answer, short version, data is going to be the largest driver of value, and we think it's an immense value creator.
Perhaps I may challenge you with 2 other keywords we heard a lot in this debate, big data and small and wide data. So what are the implications of moving from big data to small and wide data for businesses? So what type of applications areas do you see benefiting from first and or most?
Yeah, it's a fascinating topic, and clearly small data is a meaningful driver on the acceleration of AI. I think that AI is on the cusp of an amazing mainstream rollout that is going to be happening. Let me take a step back. The challenge with AI so far in businesses has been that if you put enough focus on a team of people and a large enough investment, you can get some great results. That's great for some companies. It's not good for everyone else. And so the challenge is, how do you actually roll AI into the mainstream that, it becomes usable in a day-to-day business environment? And the issue is that data and AI is incredibly contextualized. And so if you don't understand the business domain, and if you can't process in the context of the business environment, the insights don't drive as much value. And therefore, what's really required is for business people, is for decision makers to be able to interact with AI in insights and predictive insights. And the challenge there has been that AI is a very technical topic, and data is so broad and wide that data engineering and data management is its own skill set. And this, Jan, is where small data comes into play, because with small data, we get higher quality data, which means the data engineering requirements are much lower. With low code and no code, another big sort of development that's happening, we get simple to apply AI, click and drag and drop algorithms that can come into play. And so business decision makers are now for the first time able to actually embrace AI and use it in meaningfully significant ways. And I think that's going to completely open up the market for AI in a very different dimension than where we've been. And so I think small data is critical. We believe low code, no code is a building block. And we think AI is at the cusp of absolute takeoff.
Thank you. Thank you. So I want to encourage you, if you have another question, please use our Q&A function. And but before we come to another question from there, Olaf and Tobias, perhaps you want to add something to what Sanjay said, or want to challenge him perhaps? You feel free to do that too if you want to.
Yeah, I wish I could challenge him, but I think what I heard from Sanjay is really not objectionable at all, and that's not a surprise. I may want to add one really important thing here, and I'll let Sanjay challenge me in turn if he disagrees. But we, of course, know not all data is the same, right? And so when we look at data, there is data that is of high value in on a certain timeline, and then there is data that's of low value. But then moreover, and this is really it speaks to the fungibility of data, the value of certain data points changes depending on how they're packaged with other data points, and depending on the timeline of the use case. And so this is where I think the science part of data science comes in. Figuring out what data in what combination is how valuable to whom is actually more complex than any other production resource that I have come to know in teaching economics. And so I cannot underemphasize enough the fact that we need more talent that looks at the value of data in terms of insight generation and different constellations across different timelines. And when we design regulations or governance processes, whether that's on a government level or on a corporate, on a board level, we oftentimes pour out the baby with the bathwater, as they say, because we homogenize our understanding of data across and think it's all alike and it's all super sensitive or it's all super ubiquitous, when that's really, really not true. So inside organizations, we need to have much more data intelligence, not just on a working level, but on a board level as well. And that will mean a whole new wave of education on board levels and maybe some turnover as well, if you want to harness that value. Okay, Sanjay, do you want to feel challenged or no?
Olaf put a strong end to his point there, which is it'll imply some changes. And the reality is this topic of data culture is critical in corporations and enterprises and businesses. And I do think there's going to be significant changes. I think the technologists of today, the data engineers of today will end up having to play a much larger role in educating the board and helping them understand the trade-offs and implications than actually driving company strategy. You know, there's two phrases that I've come to use, one from a colleague of mine at a very large global corporation. And he said to me, you know, everyone talks about data being the new oil, et cetera. Actually, data is like a basket of fresh fruits. It's great if you consume it. The first week it's sitting on your breakfast table. After that, it's stale and it's rotten. And I think and that was really important because, you know, there's so much data lying out there, and how do you actually pick the right ones from the wrong ones becomes really important. The other thing that came out that we've learning is that, you know, you can torture data till no end till it gives you the result you're looking for. So you can actually, in other words, come up with any conclusion if you work hard enough, long enough on a data set. And so this notion of trust becomes so important. And Olaf, of course, and Tobias talk about it in the report. I had a chance to read it last night, is this bit about how do you do trust-enabled data? So it's a certified data that can be used in a meaningful way. And so we think these terms, data culture is going to become really important. Trust-enabled data is going to become really important. This notion of being able to data engineer and manage your master data in a way that it is what you want it to be and have the lineage and the accuracy is going to become really important. And those become the tricks of the trade that allow us to build a platform upon which we see significant technology advances coming.
Yeah, we have 10 more minutes. Any further questions from the audience?
Yes, I have one or two. The next one really fits wonderful in the discussion we just had. The question is, what are your thoughts on the people becoming irrelevant, or another way to frame it, the ethical or social implications of AI? Who wants to tackle that?
During the last 9 minutes.
Well, maybe I'll just do a quick one. I know Olaf and Tobias will have things to say. Look, I think the people element is super important. The way to think about artificial intelligence is it's not artificial intelligence. It's augmented intelligence. It's meant to be inputs that a human colleague needs to take and then make a decision on. Judgment will always come to humans. Prediction will come to AI. In fact, AI is the best prediction machine that we will have ever built. But actually, it's just that. And all it does is it predicts. If I took a left turn, do I take a right turn? Do I take a left turn? The actual decision to make that still falls to the human being. And so we need to think about data and AI in the sense of augmenting business decisions, augmenting personal decisions, and take that perspective as opposed to thinking about it as something that replaces the humans. The ethics side of it is much larger and it's a much broader topic, and it requires significant dialogue, significant thinking, and significant action by all of us. It isn't something we can hand off to another body or a policy or a making organization. We're all in it. It's my personal data. It's how I use someone else's data, and the ethics associated with all of that is super high. One of the things I always tell boards I meet with is just like boards have audit subcommittees or compensation subcommittees, they need to start having digital ethics subcommittees. Olaf and Tobias, I'm going to hand this to you.
Thank you, Sanjay. Yeah, I support everything Sanjay just said, and want to maybe give you an example of how we can design the complementarity of humans and data, or the models that use the data in what we call symbio intelligence, right? Symbiotic intelligence between human workers and the data or the AI. And really, it consists of two things. One is that we have to realize that humans are innately equipped to do certain things really well that machines can't do really well yet, right? So there are things like empathy and intimacy, mentoring, coaching, managing, making new theories, building new strategies. We think of machines all too often, and AI in particular all too often, as omnipotent, but of course that's the media and Hollywood running away, right, with the topic. If we design jobs in such a way that humans can play more to their innate sort of interpretive coaching, socio-emotional intelligence as well, making sense of the data for other people, in regard to strategies of an organization, that's really what we need to do. So I'll give you an example. A good friend of mine is a US chess grandmaster. The example is in our book, The AI Generation, as well, if you want to read up on it more extensively. But he has said the era where we can beat artificial intelligence in chess computers, dealing with large amount of training data, is over once and for all. No human can do that anymore. But that's also, and I think that's what Sanjay was saying with augmented intelligence, that's also not what we should be doing, right? He said when he sees an mutually augmented pair of a chess computer and a chess grandmaster playing together against another pair like that, he sees them playing at a much higher level. And he literally said that's like watching gods play. That's really what we need to do with productivity as well. There is no reason to automate all the humans, because humans can do certain things that we may have undertrained and underdeveloped, right? Because our previous paradigms were in business school, for sure, were about running spreadsheets, but that's not what the human should be doing, right? And so that's one element. There are also European machine makers that are now training smart machines how to recognize the human in their psychometric profiles, in their physical profiles. so as to collaborate better for them toward jointly higher productivity. That's the future. We just have not yet started to train toward that.
Paul, as a timekeeper, allow me one last question from the audience, and fits perhaps into this discussion again. It's about data marketplaces, and they might benefit organizations with a critical mass. So this viewer is curious about the economic value of an individual's consumer's data.
Mm-hmm. I'm happy to give it a go.
Tackle that.
Sanjay, if you want to go, I'm happy to let you. Otherwise, I'll take the lead.
I mean, I think you go ahead.
Yeah. So look, it's easy to overshoot or undershoot. There are some numbers out there that we find too large. Jaron Lanier and Microsoft have released some numbers around $20,000 per year per family. That is using some proxy data that may not be the best data to use. That may be a bit high. People on Facebook and elsewhere in the big global platforms are saying, it's pennies or a few dollars a year. It's not that much. We think the truth lies somewhere in between, but it really depends on what kind of data it is and how it is being packaged. At the end of the day, we have to give CISOs, chief information security officers, chief digital officers in companies, dashboards that show what kind of data are we leaving as we roam, as we're transacting. How valuable is that data really? Let's sort through that and let's price the data out for ourselves. And much of the data may be zero, and a lot of the data might be very highly priced and sensitive. We just don't know because we haven't done the math just yet. But the key word is agency. The CISO or CDO needs agency and needs a tool set. And so does the individual consumer as well, right? If I'm an employee in an enterprise, I have concerns about my privacy, but the CISO also has concerns about what I do. So we got to nestle the personal privacy charter in the confidentiality charter of the organization that safeguards the corporation. And those kinds of designs we're just now starting to see bubble up, but they haven't reached mass market yet.
Sanjay, anything to add from your side?
No, I think Olaf got it completely.
Okay, I think Tobias wanted to have a word here as well. Tobias, over to you.
Thanks, Olaf. I would like to challenge the notion that data marketplaces would only benefit large corporations with critical mass. Think about a healthcare startup in Europe, right? The healthcare industry in Europe is highly fragmented, lots of privacy rules and regulations. Now, for you to build an AI-powered startup, it is almost impossible to get to significant data because you need to talk to all the hospitals individually, figure out a legal agreement of getting the data, of using it. Hence, in many cases, this isn't happening. And that's why we're missing out on an infinite amount of innovations that could be there. Imagine a different world, right? Where hospitals could provide access to their data in an anonymized, in a privacy assured way. That could actually leverage a lot of innovation that hasn't been leveraged yet before. And we are seeing that, by the way, right? Hospitals are already putting their lab equipment that they are not using. They're only using it a few hours per day, right? And they're already putting it on platforms to allow other researchers to use their equipment against the hourly rate. And in doing so, they increase the usage of their equipment. So a data marketplace would essentially function the same way, just with data, however, obviously needing to ensure that it's privacy assured and that it is protected. And this is then again where decentralized Web3 data marketplaces come into the picture, and they're already existing. Look at Ocean Protocol, for example, where they can do all of this and facilitate that kind of trading in a manner that is not infringing the privacy of the individual data creators. So data marketplaces really, we believe, are a precondition for leveraging a lot of innovation that is out there, but that is currently not hitting the market.
Yeah,
thank you so much, Tobias. Unfortunately, I have to say we are coming, and it's unfortunate, we are coming to an end of this online event. Before we leave, I would like to express my sincere gratitude to our three panelists, Olaf Groth, Tobias Straube, and Sanjay Srivastava, for your time, for your invaluable contributions, and also for your presentations, of course. We have learned a lot. As a reminder, you'll find the report on our website, kas.de/USA. Thank you also to our participants for your attention and your questions. I hope to see you all at one of our next events. For now, goodbye and stay safe.